The biggest accounting fraud in American history was not hidden in offshore islands or secret vaults or coded ledgers. It was sitting in one column of a spreadsheet in Mississippi, and it stayed there until one woman went looking at night. $11 billion of expenses, dressed up as investments, a bankruptcy bigger than Enron's, and a CEO whose entire defense at trial was 6 words. I did not know about that. Tonight's file: how a gym coach turned motel owner built America's second largest phone company, how its biggest bill quietly changed columns, and how an internal auditor working after dark brought down $60 billion of make-believe. Open the file. Start a century back, because the empire he bought was built wire by wire. Long distance was the crown jewel of American business. Copper, then cable, then fiber, carrying calls that cost real money every minute. Whole towns were wired by hand for it. Remember what this network cost to build. The whole fraud lives in that fact. Bernard Ebbers was no engineer. He had been a basketball coach, a milkman, a motel chain owner in Mississippi. In 1983, in a coffee shop, he and his partners sketched a plan to resell long distance cheap. Then he did one thing over and over more than 60 times. He bought other phone companies. The buying spree peaked in 1998. WorldCom swallowed MCI for $37 billion, then the largest merger in American history. The Mississippi motel owner now ran the second biggest long-distance carrier in the country. Wall Street loved the story so much that the stock became its own currency, which meant the story could never be allowed to end. There was supposed to be one more meal. In 1999, WorldCom announced it would buy Sprint for $129 billion, the deal to end all deals. Regulators on 2 continents said no. For the first time in 16 years, the machine that grew by swallowing had nothing left to swallow. Growth by acquisition was over. Only the promises remained. Then the music stopped. In 2000, regulators blocked the next mega merger. The dot-com bubble burst, internet traffic stopped doubling, and price wars gutted long distance. Every phone company was suddenly poorer. Every phone company's numbers sagged, except one. To the board, because the trick is almost insultingly simple. WorldCom's biggest bill was called line costs, rent paid to other networks for carrying its calls. Billions a year, every year. An expense. Accounting law says an expense hits your profits now, but an investment, a thing you build to use for decades, spreads its cost over years. So the biggest bill in the company simply changed columns. Feel the effect. Same bills. Same cash leaving the building. But on paper, billions of this year's costs are now tomorrow's problem. And profits look healthy in a dying industry. No offshore accounts, no forged invoices. Just a label, applied to money that had already been spent. Quarter after quarter, the label did its work. $3.8 billion of expenses moved columns in just 5 quarters, and Wall Street kept applauding numbers that arithmetic could no longer produce. Meanwhile, the CEO had his own problem. He had borrowed hundreds of millions against his own WorldCom shares, and the board was lending him company money to keep the margin calls away. The man selling the story had bet his fortune on the story. Enter the person history almost missed. Cynthia Cooper, head of internal audit, Clinton, Mississippi. In the spring of 2002, her team caught a thread in the capital accounts that didn't belong there. When questions met resistance, they did something quietly heroic. They kept auditing anyway, at night, after hours, pulling records before anyone could object. What they found went to the board's audit committee in June 2002. Billions in line costs, sitting in capital accounts with no support behind them. The company's own paperwork described entries with a phrase, "Auditors do not forget." prepaid capacity. Nobody could explain what it meant because it meant nothing. On June 25, 2002, WorldCom told the world. The next morning's front pages did the rest. 27 days later, the company that had swallowed MCI filed the largest bankruptcy America had ever seen. The final count of dressed-up expenses reached $11 billion. Count the wreckage. 17,000 jobs cut within months. Shareholders, including state pension funds, watched $180 billion of market value burn down to nearly nothing. And in the same summer as Enron's shredders, Congress finally moved. The law that makes executives personally sign their numbers passed within a month of the bankruptcy. It took two hollow giants to buy one signature. Then the trial, and the defense that named an era. The chief financial officer pleaded guilty and testified that his boss told him to hit the numbers. Ebbers took the stand and told the jury he was a coach and a marketer, that he didn't know the accounting, didn't understand the entries, didn't know about that. In March 2005, the jury announced what it thought of that answer. Guilty on all 9 counts. 25 years, at 63 years old, effectively a life sentence, and one of the heaviest ever handed to an American executive. He reported to prison in 2006 and was released, gravely ill, only weeks before his death in 2020. The CFO who cooperated served 5 years. The columns, at least, were finally honest. And the people who did the right thing? Cynthia Cooper's team became the reason the fraud has an end date. Time magazine named the whistleblowers of 2002 its People of the Year. But inside the industry, her lesson was harsher than any award. The fraud was found by someone the company itself was paying to look. The lesson for the board, and it pairs with Enron's like left and right hands. Enron invented profits that didn't exist. WorldCom hid costs that did. Same summer, same signature law, same question that catches both. Where does the cash actually go? Profits can be labeled. Cash cannot. Follow the bills, not the columns. File it in the cabinet between the tower and the coin that never existed. A number somebody typed. A world that wanted to believe it. And one person with a flashlight who decided the columns should mean something. Every file in this series ends when that person shows up. New files every Tuesday and Friday, the frauds, collapses, and disappearances the money world would rather forget. Subscribe and bring your flashlight.